Good afternoon, everyone, and welcome to the Market Close Report for Wednesday, the 6th of May. What a cracking day for the Australian share market. In fact, our best in about 4 weeks, with the ASX 200 lifting by a solid 113 points or 1.3% to 8,793. So a bit of calm returning to markets, at least for a day. We've had oil prices dropping back. We've had the US market hitting a record high last night as well. This was partly thanks to signs that the US-Iran ceasefire is still in place. Tempers cooling after tensions, of course, escalated just a day earlier. Trump saying things like he's made great progress towards a complete and final agreement with Iran. We know, of course, we've heard this before, but for now, this has been well received by markets. And importantly, the US market hitting a record high has had some impact. And the reason why they're doing so well is partly because of the US earnings season. They've had about 80% of companies they're out with their results beating market expectations. And that's one reason why their market has outperformed us here in Australia by about 10% over the past couple of months. Now, of course, a ceasefire or reports of progress being made in the Middle East is positive news, but still quite fragile. We can't forget that the market here in Australia has still fallen 10 of the past 12 days, and we're still about 4.5% lower now than we were when the conflict first started. Another thing which might be helping is that, yes, the Reserve Bank raised the interest rates yesterday for the third straight meeting. That's for the third time so far in 2026. The good news seems to be that after the press conference that was held by Michelle Bullock yesterday afternoon, just before the market closed, is that there were signs that perhaps she's happy to sit on the sidelines for the time being and not raise interest rates just yet. But of course, this is going to depend on the data that's coming out. A couple of things to be on the lookout for before we look at how our market did today across sectors and stocks is that we've got updates on inflation and jobs towards the end of the month, which will be important ahead of the next interest rate meeting in about 6 weeks' time. Now, as far as sectors go today, a real mixed bag across the market. But what really drove us higher today is that our two largest sectors were the two best performers, the financials and materials. Combined today, they account for about 60% of our share market, and they both rose by close to 2.5%. So that made a pretty big difference. Outside of those two, the gains were much more subdued and modest. The industrials were up a bit more than 1%. Real estate was up a little more than half, and the utilities rose by just 0.1%. There were losers on the market, none doing worse, of course, than the energy sector, which was down 2.2%. The price of oil was down 4% last night, but it's gone further south here in Asia trade as well. So it has weighed on some of those energy stocks. Consumer staples, healthcare, some of those defensive areas underperforming, communication services as well. Consumer discretionary also under a bit of pressure. Now, there were a number of winners on the market today. We had the banks roaring back from what has been a pretty difficult start to the week. Westpac was up 3.5%, a couple of days out from trading ex-dividend. But we've got to remember that stocks like Westpac and NAB fell quite heavily when they handed down their half-year results over the prior couple of days, and they both fell short of what the market was broadly expecting. We've got Infratil lifting almost 15% today. This follows news out after the market closed yesterday that a group called CDC Data Centres has secured the largest data centre contract in Australia's history, a 555 megawatt deal. That's a 30-year contract, and that, putting that into context, 555 megawatts is about 40% of operating capacity across all Aussie data centres in 2025. Now, the reason why this news helped the company is because it has a 49.7% stake in CDC Data Centre. Outside of that, we've got DigiCo, talking about data centres, is up 25% today. The data centre operator said it's going to sell its Chicago data centre for about $750 million US, and this is at a 5% premium to what it purchased it at in late 2024. Now, the reason for the sale, the main one, is it wants to raise capital to basically expand the Sydney data centre, which it reckons is still its biggest growth opportunity. But also, secondary positive is that it reduces its debt burden by about $1 billion, and then also it might return some of that excess capital back to shareholders as well. I should mention Sims Limited. It was up 5.5% today. The metals recycler at the Macquarie Investor Conference today reaffirmed its 2026 guidance. It's admitting that, yes, there will be some impact from the Middle East, mainly though on logistics and fuel costs, and also saying that metals pricing remains subdued in the near term because of plenty of exporting coming out of China at the moment. But The shares are up today. We've got to remember that there's barely just recouped the declines we had over the prior 2 days. Now, there were plenty of losers on the market today. One of them was JB Hi-Fi, 6.3% lower today. Now, delivered a short update to the market. On the one hand, saying that over the March quarter, it's enjoyed sales growth across not only the 107 The Good Guys stores that it owns, but also JB Hi-Fi stores in Australia and New Zealand. However, it also warned that they're seeing some supplier-related cost increases, stock availability shortages at the moment as well. And they did say that this is a challenge and a headwind heading into the important end of financial year period for the group. Beach Energy caught up in the oil price decline. It was down 3%. We had Regis Resources down again today, 3.5% lower. Reminder that yesterday it fell about 6%, and this is after the gold miner, which has assets in WA and New South Wales, agreed to buy its peer Vault Minerals. So if this combination moves forward, it would be the third or fourth largest gold miner here on the Aussie market. And Sonic Healthcare down about 1.8%, price target cuts and a broker rating cut as well. So healthcare stocks are still the worst performers of the year so far for our market. Now, looking forward from here, we do have a few stocks releasing their earnings in the United States tonight, including Walt Disney, Uber, and also Snap. Tomorrow will be day 3 of the annual Macquarie Australia Conference. This is often nicknamed the Confession Conference because companies come out and basically update the market as to how they're doing at the moment. So it's always a risk for us locally, something to keep an eye on. As far as currencies go, the Aussie dollar sits at around 72.5 US cents, so a bit firmer against the euro as well. Did fall a bit against the Japanese yen though. Have a great evening, everyone. Make sure to tune in to the morning report tomorrow. James will get you up to speed. Ciao.